Hi again and welcome back to our VCE Business Management series. In our last video, we provided an overview of the Business Foundations Unit. Today, we're diving deeper into the first major topic, the different types of businesses. Before we get started, I want to remind you that we've included a set of study notes and practice questions in the video description below. These resources will help you reinforce what you learn in this video, so be sure to check them out. Now, let's explore the various types of businesses that are essential for our understanding in this unit. First up, we have sole traders. A sole trader is a business owned and operated by one person. It's the simplest form of business structure and is quite common for small businesses. The main advantage here is that the owner has full control over the business and keeps all the profits. However, the downside is that the owner also bears all the risks and liabilities, meaning personal assets are at risk if the business incurs debt. Next, we have partnerships. This is when two or more people run a business together. Partnerships are similar to sole traders in terms of simplicity, but the key difference is that responsibility and profits are shared among the partners. This can make it easier to raise capital and share the workload. However, like sole traders, partnerships come with unlimited liability, meaning all partners are personally responsible for the business's debts. Then we move on to private limited companies. These are businesses that are privately owned and have limited liability, meaning the owner's personal assets are generally protected if the company goes into debt. Private limited companies are often small to medium-sized businesses. One key feature is that shares can only be sold privately and not on the stock market. This structure provides more security and credibility than a sole trader or partnership, but can be more complex to set up. Another important structure is the public listed company. These companies are larger and their shares are traded on a stock exchange, typically in Australia, the ASX. This allows them to raise significant amounts of capital from the public, which can be used for expansion or other business activities. Public companies are required to disclose more information and are subject to stricter regulations, but the trade-off is the potential for greater growth and access to more resources. Next, we have social enterprises, and these are a little bit different. These are businesses that exist primarily to fulfill a social need or benefit the community, rather than just making a profit. They can operate under various business structures, but are defined by their mission to make a positive impact on society. Profits are often reinvested into the business or the community rather than being distributed to owners or shareholders. Finally, we have government business enterprises. These are businesses that are owned and operated by the government. They provide essential services to the public, such as transportation or utilities, and aim to make a profit while also fulfilling public needs. GBEs are typically large, with the government holding significant control over their operations and strategic direction. So to sum up, the type of business structure you choose affects everything from ownership and control to liability and financial management. Whether it's a sole trader, partnership, private limited company or public listed company, or a social enterprise or a GBE, not that you'll be starting one of these, each has its own unique advantages and challenges. Understanding these differences is key to making informed decisions in business management. Don't forget to download the study notes and try the practice questions linked in the description below. They're designed to help you master these concepts and prepare for your exams. In our next video, we'll dive into business objectives and how they shape the strategies of different businesses. So make sure you've subscribed and turn on notifications so you don't miss out. Thanks for watching, and remember, mastering these foundational concepts is the first step towards becoming a successful business manager. See you in the next video.